Okay, good morning, good evening, wherever you are. So for today's live stream, we'll be taking a high time frame outlook on the dollar's performance entering the first quarter of the year. So we'll be looking at two forex pairs rather, the euro and the yen. So that's euro USD and USDJPY, some high time frame technical analysis, and then I'll go over the DXY, what I'm looking at the dollar for heading into the first quarter of 2023. And then from there, we'll review local price action as well. So the euro has given us a bunch of good trades over the past 2 weeks, the past month, actually. So before the new year, and I'd like to shout out one of our members here in Trading Floor who requested for me during one of my live streams to chart some Forex and specifically Euro USD. And what we were looking at the year before, so rather what we were looking at when he asked for it last December of 2022, and asking for my bias was I noticed that there were these monthly lows from 2002. When I saw those taken out, I expected that the euro was going to be bullish, and we marked our levels out. Fast forward, and it was bullish. You got a pretty bullish move after taking those lows in hindsight, right? So zooming out, pretty much got an impulse up. And so what are we looking at? And so for the past 2 weeks, even though these other areas are marked out, we were looking at this. So how after we broke out of this high time frame resistance level, we'd probably test it as support, would make for a good day trade. In hindsight, yes, when we hit that level, it was a good day trade. Could be a swing trade, ultimately to this high time frame liquidity here. Haven't quite gotten that far yet, but close enough. When you look at the lower time frames, we've pretty much put in a range to trade, and this has been giving nice bread and butter range trades. But really, that main trade was testing this high time frame resistance flip into support, and then ultimately head up. Either way you look at it, you would have taken profits already if you took that long. So that was good. And just to mark out those levels, when the euro was here, when we started charting it here, we've identified these levels here as the resistances to watch. We did hit those right over here, tapped it once, rejected, but ultimately came up to ultimate target, which is this liquidity right here. So that was a good bias to have during our streams when we did look at the euro. So whether you're scalping or day trading or looking for a swing on Forex, even though for me, in my opinion, it's usually a scalping or day trading asset, that was good high time frame bias to have. And so where are we now? So we're just hovering above below that liquidity area. We may not even get there, but we still have that marked out because still has been unpurged. Now, I was telling the group to start the week that timing is right for this week, for last week rather, for it to take the high. We didn't quite get there, but we had some fib levels lined up where we rejected from, which was good for ultimately another just trade the daily range until it breaks, right? For a short here, then another long here, which was good. But for me personally, I'm remaining patient on the euro, especially after today. Today we traders know that there could be catalyst that will bring some volatility in markets. So that's something to prepare for today, 1st of February. But other than that, if you have these levels marked out, then that shouldn't be an issue. But me, I'm keeping a neutral bias. I'm no trades. Why? Because we have these levels marked out, and I already had my day trading share on the euro. So after today, that's where I'll begin taking a few more scalps with everyone in top floor here in trading floor. And so where do I think USDJPY is gonna go in the medium term? Well, ultimately seeing how bullish it is now, I still see us testing those highs ultimately to come up, either reject immediately or ultimately come here around 1.107 max, I think. That's just my opinion. Could not even get there, but we have our levels marked out below, or the daily range may just keep trading, sticking to a daily range. But this above that high time frame liquidity area is still some imbalances left to fill, which I am interested in shorting if we do get that far. If not, then we have our levels below for day trades. So we could just test the support again, right? And then keep ranging. But my opinion is I don't think that's gonna happen because this resistance level has only been tested once, whereas this was tested twice already. So there's pretty good confluence for levels below. So to be specific, oops, just this on the 1 hour, really. If you go on the 1 hour chart, so yes, pretty nice day trading asset, the Euro USD pair, pretty nice range there. But if we go here, there's still some imbalances left to fill right over here, with the median being at 1.07 exactly, which is also in confluence with this wick right here. So it could give a very good reaction for a day trade. So ultimately, we just let's go to the 4 hour. With that 1 hour level identified, I see the Euro USD pair rather, doing something like this. We could just dangle here, tap it for a tickle over there, break of structure, test the support, lower high, then come ultimately here for the first week of February. Maybe. That's my bias on Euro USD. And then from there, what are we gonna look at? So from there, that's when we monitor if so this range acts as resistance eventually if we do break. So price does something like this where oops, it cascades down, ultimately testing that median, flips this zone here, has resistance, range there for a while, and then come back down. Now, why is that? Now, why is that my preferred scenario for the euro? Well, clean this up. Pretty much because on the high time frame, there's a lot of unfinished business down below, and I still think we need to correct this move for the euro. So that's just my bias. Of course, today, personally not trading, keeping a neutral bias, of course, because with how volatile price can get later in the day, we could just break through that liquidity, test that imbalance area, this imbalance area over here, and then ultimately close the daily right below it. So there's gonna be a new range to trade, right? But ultimately, I think price does that. cascades down, break of structure, and then tap this, right? So let's consider the first quarter of the year, right? So let's not squiggle too much, too far ahead. So probably something like this, that break of structure sometime in mid-February, and then by March, tap that. There's too much confluence for it not to get tapped. So that's my preferred scenario on the Euro USD. As you can see, it has a lot of confluence in that area. So there's the 618 pull from this pivot low up to the top, and also the median of this imbalance zone right here. So just something I'm keeping an eye of in the high time frame. Doesn't matter where price goes today or tomorrow. It's just something I'll have in mind as we trade this daily range. We move on. So there we're getting some more volatility in the opening hour of 11 New York time. So there. But until this as long as this trading range remains, there are scalps to be had, of course. But on the high time frame, that's what I'm looking at. And as long as this former resistance area still holds the support, then you can it's safe to assume the range will continue. But of course, eventually the range breaks, and when the range breaks, you have to be prepared. That's why we have those levels marked out. All right. So that's pretty much it for Euro USD. Keeping it simple, even with just candlesticks. So this imbalance here has already been filled this year. So I'd expect lower if that does happen. But then ultimately if we do hit the zone sometime by March, then just a few more days of ranging here, a few more months even, void here. So we're gonna need to have some price balancing here heading into the second half of the year even, but that's still too far ahead. So just some high time frame levels to keep in mind for the Euro USD. Now another volatile pair in Forex is USDJPY. Let me just clean these levels up real good. Okay. So for USDJPY, a very volatile Forex asset. So it's just been weak. The yen has just been weak against the dollar, right? So, but now it's correcting a bit. Well, finally, right? Because it's just been going, impulsing up for for years now. Yeah, it's almost been 2 years. So a correction is eventually due, and I'd have this interesting level marked out, which is the high from 2015, which is in confluence with there's still some monthly imbalances to be filled. This is the monthly chart, so this is gonna take some time, but I am interested and I remain bullish on the dollar against the yen. Is this price imbalance on the monthly, which is very, very good confluence. So that's 125.8, the yen against the dollar, which is in confluence with this high from 2015. Keeping it simple, really. So it's safe to assume that the dollar is going to get weaker maybe in the short term, maybe not. Could just hold support here and then, not break. You get a bounce ultimately. But this level is something I'm keeping an eye on. So that's 125.8. Keeping it simple on USDJPY, really, if you go on the daily, you can see it's a very good forex pair to trade, day trade even. maybe even swing on low leverage with a few pips, right? But yeah, even on the daily, that level is respected if you zoom to the left. So probabilities are high that once revisited, if again if, then we get a pretty good reaction here, range for a while, and then ultimately continue the bullish move up for the yen, which is my bias on the USDJPY pair. Yeah, keeping it simple really. So why I chose the euro and the yen, simply just because they are two of the, in my experience, the best forex pairs to trade. They give really good volatility. The yen especially, if your bias is good for the day, it uh gives very strong moves, enough for scalps, enough for day trades. You can take numerous scalps or even one big aggressive day trade if you get direction right. Just be careful with the wicks, because a volatile forex pair, sometimes it becomes wick city, you know, especially in volatile days. So an example is here, just range. Okay, so next would be the DXY, so the dollar ultimately, which has been rather weak to say the least, but that was expected because it's been strong for so long. But we are at support. We are at key levels right now. Let's go to the weekly chart. So here, so where we're dangling at right now. So it's been 3 weeks of us dangling here. Pretty simple. These two candlestick weekly closes here, and then if you look to the right, if you move here, it's just been pretty much no range, just three weekly green candles. So makes sense that we've been ranging here for 3 weeks now, just to build some balance, right? So ultimately, if we do close the weekly below this green line, then I see us moving down a bit, correcting it more, and then testing this as resistance, ranging a little bit more, and then probably move. And then from there, we'll get more data if the dollar continues its strong move, which is my bias heading into next throughout the year. But if not, we have these levels below, which is important to keep an eye on. Just this. So here, this is a good level to watch, 98. But that's only if, so this monthly imbalance here on the DXY even. So there, which is at 100, 100.4, 100.35, give or take. That is my next zone of interest if we continue consolidating here at support. Consolidation at support is generally speaking bearish. So if you range a bit more here, a nice tree tap would be nice. Grab liquidity here once and then test it again. Grab liquidity there, test it again, and then boom. And then from there, we reject here or we continue to move up. That's what I'm looking for the DXY. So my bias on the dollar is on the long term still bullish, really. On the short term, of course, yeah, it was bearish. A correction was due. It's just been so strong for so long. The bear market has been going on. Risk on assets have been, stocks rather, in the trad markets have been uh, rather bearish for the past year. Now we're getting some rallies. So of course the dollar is getting a tad bit weaker. Of course, in perspective, it has been pretty strong. So let's not get carried away just yet. But of course, we have our levels. If we flip these support levels into resistance when we get our ranging here, then ultimately it's bearish. So that's what I'm looking at. In the long term, I'm bullish on the dollar. The short term, of course, yeah, bearish, probably about to end soon, but it is crucial, especially when you get to 100.4. So there. We'll get more data tomorrow. Today's gonna be volatile. So that's why we've just been we look at Euro USD. Prices just been delivering it rather bullishly. Did get a pullback on New York Open, but pretty much during Asia trading hours and during London, it was just a swift move up for most of the day. So if you were long and strong since Asia, then congrats to you. Some levels locally I'd be watching. This is Euro USD, by the way. So you can just simply get just start with a simple fib puller. And 0.5 is in line with this order block here, but I'm more interested in holding this uptrend fib 1.8 1.086. But that's just speaking locally, right? Get a stop pull. Let's see. Let's see if it lines up. Get some high time frame pivots, right? Actually, nah, not interested really, but could nibble on long here. Although it is risky, who knows if price even gets low. Just a tiny nibble right there. But we'll see. It's safer during high catalyst days. It's safer to keep a very neutral stance on things and just have high time frame levels marked out. Really, that's a safer trade take. Even this is risky because price can just wick everywhere in many directions, especially on Forex during high catalyst days. But mainly on Euro USD, that is what I'm looking at because we've had just pretty much a bullish move up. You'd expect it to correct sometime soon. And we have our levels marked up to the upside and the downside, especially the downside, since those have the most imbalances to fill. But then again, it's always safer to wait until the catalyst event is done, volatility calms down a bit, and then you can take a safer trade. So again, so either way, we're prepared. Price test support or price moves up, breaks out of the liquidity, but it's really just a purge, hits this imbalance zone, and then ultimately goes back to a range. That is the ideal scenario for catalyst filled events like today. Yeah, that's pretty much it. This is pretty much the main chart I'll have on the high time frame for Euro USD. Okay, that's it for me. So if you have any questions for top floor members, yes, you can just at me in boardroom in our Discord and stay tuned for other live streams from the coaches. So tomorrow I'll be doing a members update, also a market update on different assets. So that's the the S&P 500, and also some crypto, which continues to be volatile. So that's been good. Other than that, that's it for me. That's my high time frame outlook on the dollar's performance heading into the first quarter. All technical levels, simple candlestick reading, and yes, more love for Forex, which is a very good trading asset that helps with your skills really as a trader. And even with simple candlestick trading, you can just mark levels out, and then more locally, that's where you have your smart money concepts that you can learn here in trading floor. You also your Elliott wave theory that you can learn here in trading floor, and then use all those skills together to help you make an informed decision in trading. So other than that, that's it for me. I'll see you all in the next stream. Bye guys.